Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. We've got a pretty huge update here today. A lot of it starting with fundamentals. We're going to touch on basically the odds of the Fed cutting rates here this year, as well as the hawkish FOMC meeting minutes from yesterday and tomorrow's Jackson Hole conference. We got a pretty bearish type of scenario here playing out based on that sentiment. I do think that 112,000 is a good solid support, but that may not hold very well if we continue to progress lower with this fear, uncertainty, and doubt. So we're going to take a look at everything. Be sure to stick around. Let's take a closer look. All right, folks, let's go ahead and get started off with some fundamentals first before we jump into our charts, just to kind of give you some perspective and a foundation of why we're seeing such bearish divergence here. First of all, the odds of the Fed not cutting rates in September is increasing. This is now at 34%. These are just statistics, of course. Majority of them are made up on the spot, but the odds of this increasing is higher because we're seeing hawkish FOMC meeting minutes. As soon as this happened yesterday, the price action for Bitcoin stalled out, and we do have a Jackson Hole conference tomorrow as well. So these are all fundamental things that are stacking up, not in our favor. And there's, of course, some bearish divergences, not just on the charts, but also in the real world too, with war efforts increasing as well. So obviously, I'm not a fundamental, analyst. I'm not a news reporter, but those things all do factor in. So please just kind of know in the back of your head when we have a divergence like this, in addition to those things kind of happening, there's a significant continuation potential. The rising wedge here, of course, kind of reaffirms that. So if we do end up seeing recovery, I'm still sticking to the fact that we're probably going to reject off that 119 to 120K range. But once more, could totally be off on that, but the odds of retesting the ascending trend are quite high if we do increase from here. So just bear that in mind. But the key takeaway here is that this green arrow pointing towards our increasing oscillators to the downside, basically that histogram, is not a good sign. That usually implies further continuation just based on that sentiment there. Furthermore, too, we can obviously see here, and this is pretty clear and transparent, Bitcoin dominance is essentially still range bound, which is actually good for alts. That basically means we're at a 1-to-1 ratio for Bitcoin. So as Bitcoin pulls back, alts are too, and the inverse as well. But we can see a lot of money's flowing into stablecoin right now. This is what happens in fearish markets. So as that stablecoin increases, we're going to start seeing a lot more bleeding out. So just keep that in mind. And speaking of bleeding out, just do a quick little side-by-side comparison here. You can see Bitcoin is still establishing lower lows and lower highs on the far left here. Ethereum recovered quite well yesterday. Congrats again to our committee on that profit from our $4,100 long for Ethereum. But there's a reason why we secured profits early, right? Same thing goes for any other trade that we have. Always recommend adjusting your stop loss into profit as you continue to progress higher. All that said, though, Solana, SUI, and XRP still have yet to reclaim their local resistance. 185 for Solana, 360 for SUI, and roughly $3 for XRP. Those are the current resistance ranges for those coins. Now, touching here on the crypto market overview, fear and greed index is starting to taper off and pull back a bit here. This is very standard. We're currently in a fearish market, even though this represents neutral. People are starting to get a little bit more concerned, right? Yesterday we're at a 45, today we're at a 50. It's kind of hanging out in that little middle zone, which isn't bad, but it's also not great. I don't really like these kind of transitions. Oftentimes they're difficult to trade. Altcoin season index is still in decent shape. We can see we're remaining above that 1.5 trillion market cap level, which is generally a favorable sign. So once more, as Bitcoin dominance continues to go mostly sideways, we're seeing altcoins maintain. What we don't want to see is Bitcoin dominance shooting straight up and obviously altcoins going down. That's usually an inverse pairing, and that puts us in a bad position there. So generally speaking, Bitcoin dominance kind of hanging out in that current range, 58 to 60%. That's a good sign overall. So that's kind of where we're at there. Now, looking at the back-end data here for Bitcoin, let's go ahead and start with this first and just kind of recognize that top traders are shorting the hell out of this coin right now. Okay, so this is increasing, as I mentioned last couple of days. The average top trader is increasing their amount of leverage, and we're starting to see a lot more shorts pile up, and bids continue to pile up as well. Now, generally speaking, when bids are on the rise, the price is generally on the way down. So that's kind of where we're at, because again, the buy orders are in essentially to be able to fill those shorts that are getting squeezed out, or sorry, in this case, actually the longs getting squeezed. Believe it or not, you can actually have long squeezes too. It's roughly the opposite of a short squeeze. They're just a little less common based on the simple fact of how how less common shorts are versus longs. All that said, having looked at here, the open interest 116 is that rough estimate. More like 115.5 is that current resistance for Bitcoin. So we do see the price end up rallying back up to that level. That is the kind of area to consider securing profits once more. 115,000 is a close approximate there for us. Furthermore, liquidation short delta, I'm sure this probably increased a little bit. We look here, we're at about 10 billion in short liquidation delta. And we look at the last 7 days, there's more long starting to pile up in the 112 to 111 range. So it does seem sensible that we're going to probably see somewhere in the range of sub 112,000 as a quick liquidation sweep here to the downside. We're getting really close to that range. Okay, so this is the last 1 week's worth of liquidation heat map, essentially telling us where all the longs and shorts are. Obviously, the longs are on the bottom, shorts are on the top. All right, so that's kind of where we're at there on the back end for Bitcoin. As we can see, we're moving towards our previous all-time high of approximately 112,000. So just keep in mind that is somewhat of a support zone, or more so a demand zone, essentially giving us implications that the likelihood of buying this dip is quite high for most. You just got to recognize we've got a lot of fear, uncertainty, and doubt in the market right now, and that's never truly a good thing. While we're not in a super fear mode right now, we're trending towards that based on a lot of uncertainty with, once more, Fed rate and the whole thing. So all that being said, we got our 0.5 fib level here to 111,000. That does provide some support as well, and consistency with our previous all-time high. So once more, 111 to 112 seems like a very logical place to see the price action consolidate and or bounce. Worst case scenario, extreme worst case scenario, kind of giving you a perspective, just based on fib levels and accumulation of volume, we do have the 108 to 107K range. That's kind of a decent chunk of volume here. But the most amount of volume is at 105, or 104.5. You could just approximate, round up, and say 105,000 would be that solid support for us based on volume. Just simply put, that's where people are averaged in the most over the last 2 or 3 months. Okay, so that's just kind of a bigger picture perspective there. But we are still diverging. The daily time frame has not shifted any kind of momentum. As I mentioned yesterday, the macro is still bearish. Okay, so we want to be mindful of that and recognize that even though you can catch some nice little longs here and there, which we have and we did, there's no reason to to presume the price is going to go straight up from here. All that being said, 4-hour time frame is now pretty darn bearish. We did not bounce off of, or we did not surpass 50 on the RSI. Stochastic swinging down. MACD is now trying to diverge. We're under all moving averages. Usually these are not good signs to want to buy. The only reason why we took longs yesterday was because it was at massive overextension into that liquidation range that we wanted to buy into. We saw that natural bounce, right? Normally, those aren't good conditions to take a long, but once more, tighter margins, you can be okay with that. Furthermore, just kind of clarify here, we took 35% on ETH, and our current Bitcoin trade, I think it missed our take profit target by $100. So really close on that one. We're currently just under for our entry at 112,600. So the jury's still out if we're going to consider closing that or adjusting our take profit targets. But at this point, there's no reason to consider a long at this exact level. Once more, 111 to 112K range is a solid support based on previous highs. There's some confluence there, but based on the war efforts, you're probably better off waiting until Jackson Hole tomorrow to see what happens first. Because this is probably like a situation where there's a lot of selling pressure going into it because there's no understanding of what's going to happen next. And there's just too many things in the world right now to cause the charts and everything that we see here to work fairly well. So what we're going to identify today, of course, is mainly key level supports and obviously good areas of interest if you're going to consider dollar cost averaging on the way down, or just is it better off to wait, right? At this point, though, I recommend not taking any longs just to kind of keep it safe and simple. That's the overall sense. So taking a look here at Ethereum, we want to double check the back end here and just kind of recognize that Ethereum does have a lot of support in the 4280, 4380 areas, right? Now that can be work as a resistance too, because that's above the price. And as you see here, the price came up to reject off that point of control, essentially that open interest range there at 43.80. So hopefully you secured profits on our long there between now and then with our entry of 4,100. But if we take a look here at the liquidation delta, it's pretty close to break even. So even though the market is shifting down, we're starting to see this still a divergence. This coin does have a lot of strength to it. So hypothetically, you should be in decent shape if you are in a long. I wouldn't say you got to run for the hills, but you do got to make sure to secure profits when you can and to cut losses, obviously, if that were to be the case. Every time I send out a trade alert or a trade signal, I provide invalidation levels. Make sure to pay attention to those. If I'm not mistaken, for a long, 3,900 is that rough estimate of the invalidation because that's just below the previous high. Generally speaking, you want to be careful holding on to trades for too long. All that said, liquidation here above the price between 4,400 and 4,500. That's the heaviest local concentration, and 4,000 to 3,900 below. That's the rough estimate of both areas of liquidation. When we take a look here, just kind of clarify some areas of support. We got our previous high at roughly 4,000, and then our local high at about 3,900. So this is a nice solid support range here for us if the price continues lower. So buying the 4,100, 4,000, or $3,900 dip isn't a bad idea, all things considered, because the previous high, I think that goes back a couple of years, but that wasn't somewhat of a high for us. I think it was actually last year, as a matter of fact. And if we look at the local high here recently, 3,900 was that local high in the 4-hour time frame. But no matter how you look at it here, 4-hour time frame, we rejected off 50 in the RSI. We're seeing a significant divergence. The daily time frame is also reflecting similar behaviors outside of moving averages. We're seeing some early signs of reversal. So even though we haven't shifted fully bearish on the daily time frame for ETH, there's a decent chance we do come back down to that that $3,900 to $4,100 range if things continue to progress the way they are right now with the back-end data on fundamentals, but also with Bitcoin. We can see Bitcoin is really trying hard to retest its previous all-time high there. So that's kind of where we're at there for ETH. Moving on to Solana. Solana has looked very strong here recently, but I'll be honest, this pullback here makes me second guess considering a long position, at least just in the blind. I would highly recommend waiting a bit longer for things to kind of calm down right now before you consider a long, because just buying, trying to catch a falling knife, as they say, is never a good strategy. Taking a look here at Solana open interest on the right, a little chunk at 181. We may see some support there. So there is some, a lot of people adding to their position at 181. Liquidation delta is almost pretty much at break even. So generally speaking, when you see a bullish convergence and then it shifts bearish like this, it's not a good sign to take a long. You are probably better off considering a short position with Solana, even though I don't necessarily recommend any trade right now at this exact time. So that's kind of roughly where we're at there. Let's double check a couple of things too here when it comes to the actual chart data. So taking a look here at the chart, we can kind of, if we zoom out a little bit, we can see the most amount of interest on this coin at 181. We talked about that yesterday, that 180 to 185 is that resistance range for us. While we broke above it, we almost hit 190 plus. 185 still proves to be somewhat of a resistance for us. So just keep in mind that's roughly the consideration there for Solana on that sense. The 4-hour time frame, not really looking great. We got a lot of divergence, losing 50 in the RSI. These are all signs you don't generally want to trade into. But the daily does tell us that we're still in decent shape. So Solana, Ethereum so far have decent daily time frames as far as holding above specific support ranges. So just keep in mind, that 170 to 175 range, solid amount of support there, but we still haven't officially retested that. I think we came in as low as 176 yesterday, and I wanted to get in at 175. My alert never triggered. So I may reconsider a long in the 175 range if we see that, but I'm going to make sure and make certain that I know what's going on with Bitcoin first. Moving on to SUI, let's just double check this here. The back end, I think, is looking still quite bearish. This is one of the coins here, as a matter of fact, that's been pretty much diverging bearishly for quite a while, a lot longer. It hasn't recovered quite as well as majority of the other coins that I cover. 350 is that local area of open interest, not really all that trustworthy there. We look at liquidation short delta is still high, and we have a tremendous amount of liquidation here. I mentioned this yesterday that 330 to 320 may be a solid consideration for a long, or better off waiting to that level, because we do have a significant divergence in this area. Or more importantly, sorry, not a divergence, just liquidation is heavy in that range. So it would make sense we're going to, at the very least, see a candle wick down to the 330 range. So hypothetically, along from that area may be worthwhile, but let's double check and see. We have a bearish engulfing candle here on the daily. That's never a good sign. We take a look here on at some of the indicators, we're still below 50 on the RSI. There's nothing good here on the daily. This coin is still very bearish. And then if we look at some of our fib levels, we lost our 0.786 fib, which is one of my least favorite fib levels. Doesn't matter too much. The key takeaway here is that our previous low here of 335. That'll probably be one of the next retests. There's a pretty big order block there. But the key, I think the important thing to recognize here is that waiting for the 320 to 330 range is probably going to be a smart call. We may see a double bottom in the 325 to 330 range. So that's probably a good consideration for a long. Once more, very much depends on Bitcoin. Bitcoin right now is starting to landslide, so not a good look. So overall, that's kind of where we're at there for SUI. Be very careful trading that coin. Same thing here with XRP. It's pretty much still a 1-to-1 ratio with Bitcoin. You can see a very similar chart pattern for BNB. Correction, sorry, for XRP. BNB is a different story. When we look at the overall backend data here for XRP, though, we want to note that there's more interest above the price and below. There is a little bit of open interest here at 280 to 275. So starting to see some people trying to buy that local bottom, which makes sense. It's a very standard trading technique. Liquidation short delta is increasing, and we have more liquidation below the price and above. So I'm going to stick to my guns. I mentioned this previously. The 270 to 280 range would be a solid consideration for a long, because we'd sweep these late longs here essentially, and that's generally what market makers love to do, pump the price afterwards. So SUI and XRP are both good contenders here for buying the dip once they sweep those lower areas of liquidation. Taking a look here, though, really quick at the charts for XRP. The daily time frame has broken bearish. We talked about this yesterday and the day before. And then furthermore, too, even though we have a 4-hour resistance here with a 20-day SMA, until we close above that, we're not going to be in a good shape. So the key takeaway here is that being above the 20-day SMA is an important factor when you're considering a long position. So usually I like to wait for the price action to close above that level first. That's a good rule of thumb. But once more, based on liquidation alone, we have a lot of liquidation here in the 270, 280 range. Once that's swept, that may be a good consideration for a long. It would also be a potential double bottom too. So that's kind of what we're looking at there. And keep in mind, Bitcoin is retesting 112,000 right now as we speak. That is its double bottom too on the macro. It had hit that level one time before. So we're going to see here soon if it holds. Why don't you comment below? Let me know your thoughts. See if we're looking good. And either way, I want to say thank you again so much for just being an awesome part of my life. We've got a lot of new members coming over to not only our Discord, but also our YouTube and some other social media platforms. So I appreciate y'all just being really awesome and very constructive and helpful too. Thank you very much. So we'll look forward to working with you. Have a great rest of the day. Feel free to reach out to me if you have any questions. Thanks again.